Okay, so let's have a look at this spreadsheet. The top of this table is user input values, whereas the Bitcoin capital allocation table is on the bottom. As a user, you're expected to enter your values only in those cells where the text is blue. You don't really need to change anything, as these default values are meant to give you the scenario that I envisioned. This capital allocation table will tell you how many US dollars you can invest at a different price for Bitcoin. The top of this table is $30,000, and then I've chosen $20,000 and $10,000 as my mid and the bottom price. So you can pretty much say that I have two ranges here. This is the upper allocation and the lower allocation. So anything between 20 and 30,000 US dollars will be upper allocation. Now, depending on how much capital you have, and as an example, I have $10,000 here, you can choose how much of that capital will be allocated to upper allocation. In this case, I've chosen 40%, so 40% of $10,000, that's $4,000, which leaves another 60% that gets allocated to this bottom portion. If you change the amount of capital that you have, all the numbers will update accordingly. But let's keep $10,000 as total capital and also 40/60 as allocation between the top and the bottom. Now this allocation table assumes 8 different prices for the top range and 8 prices for the bottom range. They're evenly distributed. In this case, $1,250 is the difference between any of the two prices in this table. The amount of dollars invested at a different price actually increases as the price goes down. That is intentional. Thus, for every particular price, you will have certain amount of US dollars to invest, which will correspond to a certain amount of Bitcoins that you can buy. Since the price goes down and the amount of dollars increases, the number of Bitcoins that you're purchasing at every price level will increase actually even more. This column to the left shows actual individual amounts that you will invest for every price level, whereas the right column shows the cumulative dollars that you've invested so far up to that particular price. The same goes with these two. So Bitcoins purchased at every single price, and also cumulative number of Bitcoin that you've accumulated as you've been purchasing down. Now the bottom in this table is $10,000, which means that if the price of Bitcoin goes to $10,000 and you've executed all of these purchases along the way, you will have invested all the capital you have allocated to purchase Bitcoin. If the price, for example, goes down to $16,250, you will have invested only $6,016, which means that little less than $4,000 will remain uninvested, or it will sit in cash. Now, if that turns out to be the bottom, that also means that you will never really invest those $4,000 unless you change the plan and then modify something. Thus, this allocation table will have you invest more and more as the price goes down, and there is no guarantee that price will go down, and also if it goes down, we don't know how much it will go down. Thus, this table manages your risk as to how much you invest at every particular level, but at the same time may produce that some of the capital is not invested. And that is quite normal in investing because you don't know what is going to happen. If you don't really believe that Bitcoin will go below $20,000, what you can do, you can increase the upper allocation of your capital to, let's say, 75%, which will leave only 25% to be invested below $20,000, which anyway you do not think will happen. So that means that if the price goes down to $20,000, you will have invested $7,500 or 75% of your $10,000, and then another $2,500 will probably remain unused. Now, theoretically, you can change these percentages to any number you want, but if you go above 75%, then some of the negative numbers may appear in the table. So I do not suggest you go above 75 or below 25. So I would say the range for upper allocation should be anything between 25 and 75% of your total capital in US dollars. Now, if you keep it at 25%, that is considered a very conservative approach, because now you're allocating only 25% for prices up to $20,000, which means if Bitcoin price goes down to 20,000, you will only have invested 2,500, and another 7,500 will remain available for prices below $20,000. Now, if you pick more conservative approach, that means you will invest less for the same, let's say, price, but at the same time, that means also that you may miss more in case the price doesn't dip as low as you anticipated to dip. Either way, it is your choice, and you can tweak these numbers as you wish, so you can get whatever suits you the best. If you choose 50-50, then all the values for individual dollar amounts that you will invest at different Bitcoin price levels will be the same. So at the end of the day, choose how much money you have. Let's say $20,000, or how much you want to invest in Bitcoin. Pick the price that is, let's say, current price for Bitcoin, and let's say put the 31,000. And I will say, well, the bottom that I expect is the bottom of the bottom is, let's say, 20,000. And then you can put mid price, let's say 25,000 or so. So tweak these numbers as you wish. So depending on how aggressive you are, so the more aggressive you want to be, these two prices are going to be higher. The more conservative you want to be, these two prices will be lower. Also, this upper allocation will determine how aggressive you are. Again, the more aggressive you are, the more you will allocate towards this upper band of the prices. So choose how aggressive you want to be and pick the proper allocation that suits your investing appetite. So feel free to download this spreadsheet from the blog post, and as always, get in touch with me should you need any other explanation, or if you want to schedule a one-on-one session so we can go in more details and maybe even create some more elaborate trading plans that fit your individual needs and investing aggressiveness or investing conservativeness. So anything can be done. You just need to know where you stand and how much of a risk you can withstand, what is your risk tolerance, and how conservative or aggressive investor you are. Thank you very much.